Hi, my name is Alayla. I trade Trendlines, and I'm gonna show you how I got this exact setup using my strategy, the bounce method, on volatility 75, a long position, even though the market is bearish. So without further ado, let's get into the video. The two methods of using trend lines is the bounce method and just using trend lines with market structure itself. Now, the way how I got this setup, I first used market structure with my Fibonacci retracement tool to see where the market is going so I can align the confluences to confidently take the trade off that long position. Okay, I don't recommend counter trend trading if you don't have the experience with it, if you haven't lost as many times. I don't recommend it. You have to lose a lot of times to really understand counter trend trading itself, know where the market is going, use your judgment, etc. So let me just show you how I did this. We're gonna do a markup on volatility 75, mapping out just basically how I analyze at first, sit and wait on the setup to play to reach what it needs to reach. All right, so 75 is bearish. All right, it's bearish. Once we see a trend forming coming with my trend line from the highest point here on the chart connecting to the second point, ensuring that all candles are on one side of the trend line. This is just for outlining the directional move of the market. It's just a higher time frame trend line. It's not a trend line to say, okay, hey, the market broke this trend line, it's time to jump into the market to enter a long position. No, it's just there for guidance. It's just there to tell me the market is trailing along this trend line here. Now, what I'm going to do is highlight my major key levels on the chart. Alright, so we have a level here because we have rejections, rejections, support, rejections, straight across the board. I like that level. If the market does come back to these levels, we can definitely expect some reaction. It probably uses it as resistance again to push to the downside, or it breaks through it, uses it as support to push to the upside. Let's check for another. Alright, this can also be another because we have support, 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 support. Straight across the board, we have support. Okay, let's not make it confusing. I can change this to black and tone down the lines a bit so it's not too, overbearing. Yeah, let's have those fine lines on the chart for once, Salila. Let's do that. Not gonna highlight any down here because based on what I'm seeing, this chart, based on the information I'm seeing here, this chart has only been, the market has only ever been down here once, which is this, what I'm seeing here, this data, this movement that the market is doing. So since I'm still on the 24-hour time frame, what I do is I outline my external structure. Outline my external structure. The last swing high on the 24-hour time frame, the last relevant one is this high up here, and this is the low that started the retracement in the first place. This is going to stay on the 24-hour time frame for me because I don't really want it to confuse me. Alright, so that's what we're working in. Also, I come in with my Fibonacci retracement tool. Levels that I use on the Fib are 38, 61, and 78. Look for confluences around these levels to tell me where the market is going. To know, go for trend continuation. But the setup that I showed you, this is the bounce method for on this retracement, this push to the upside. So I'm going to drop down to the time frame that actually shows the retracement trend. You know that I tend to wait on the market to retrace to the 38% Fib level first before doing anything. So I'm going to go down to the 1 hour time frame to see the trend form. Alright, so we have the trend here. The market retraced to the 38, past the 38. Now we can come in with a trend line and have my point A here, my point B there. Alright, so we're riding the trend. If the market does not break the trend line after waiting on it to retrace to the 38, a trend forms, then we definitely know it's going to probably go to the 61 or the 78% fib levels. So we're going to ride it. It doesn't break the trend line, we're pushing to the upside. So just wait on a retracement towards the green trend line. As long as we don't break the green trend line, we can continue looking for long positions. The first thing we should probably look for is a change of character and then wait on a trend to form towards the green trend line. Alright, so we do have a change of character here. The break below this level, that's the change of character. That's the change of character. Now we wait on the trend to form towards the green trend line. Alright, so to see this trend, recommend going on a lower time frame. Alright, so we see the trend more on the 15-minute time frame. We just ensure that all candles are on one side of the trend line. Now, we wait on the break. Either the market is going to break the green trend line or it's going to break the red trend line. You're counter trend trading, you know the risk involved. If you're going with the trend, you can never be wrong unless the trend is going to reverse. So, we have a break of the red trend line there. You can wait on the candle to close. You can wait on a retest. Stop right below the low that pushed up the market to break the trend line. We target the high up here that started the retracement, and let's watch the market play out. And now, this is how I do it. If the market does not reverse, not paying attention to confluences, right? Not paying attention to fair value gaps, leaving out order blocks, all of that, right? Leaving all of those out. If the market doesn't break the trend line around the 61, it's probably going to the 78. All right, if you know it's the 78% level is the steepest level it can go to based on the levels that I use before it pushes to the downside. If it doesn't break the trend line around the 78, then you know that it's probably doing a steeper pullback on the monthly or on the weekly time frame or something, or it's just completely reversing altogether. But if it doesn't break the trend line around the 61, then it can go to the 78% level. You just do the same thing, wait on another retracement, and you know what starts the retracement, you wait on a change of character, and then that is when you come in with a trend line. Alright, just like what we have here. But I don't really see the trend forming. We do have the retracement. We do see the market change character here, pushing towards the green trend line, but I don't really see a trend forming. Like, you know, okay, we do have a steep pullback here. Do we have a break below that low? We do have a break below it. We can come in with a trend line. And then you target the high up there. So you see what I'm saying? This is basically how we do it. The market is currently around the 78% level. If it doesn't break the trend line there, then you know that it's going to continue pushing to the upside. Just be smart about it. Alright, so that's basically the end of the video. Thank you for watching. If you have any questions, leave your questions in the comment section. Read the description also. And have a wonderful rest of week. Bye.